Hello, ladies and gentlemen. This is not Gregory Mannarino. This is the Maestro here with the market report brought to you by the Maestro Way. Let's go ahead and dig into some charts here. You're looking at the US oil chart where you'll notice that I have found a bottom and potentially we have a second reference point here, and we're going to watch very closely to see if this line will hold. A lot of folks are, of course, very bearish oil, given the fact that we can produce oil now very cheaply, and we have a lot of American wells that are capped. But we're going to be watching this. Also, within this same chart here, there could be the potential for some further movement downward. You can see we've got a few places where this support line would be holding. We also have some resistance here. We've got about 3 or 4 touches on this resistance line here. So keep this chart in mind. Moving on to the Russell. This, for me, is one of the more important charts in my arsenal to keep track of the direction of the overall markets. Many of you probably know much more about the Russell and its importance, but here you're going to notice that there is clearly, fairly clearly, a line of resistance. I believe that this next week, this line of resistance will be tested. The question will be, will it break to the upside? Notice we do have lower highs, and we have lower lows on the Russell chart. Moving on to the NASDAQ. One of the features, and I'm sure a few of you have seen some of my work, but if you've not, you'll notice that I clearly identify gaps in my charts. Sometimes they're not exactly up to date. So this one, for instance, I would want to pull out a little bit further beyond the current price action. But you'll notice that in the the NASDAQ, there happens to be a lower gap just below the close on Friday. And notice, of course, on Friday, that's a pretty bearish close there. The last half an hour candle is pretty bearish. But in fact, there is, believe it or not, there is a gap up above, and it'll be interesting to see, if we can scroll out here, it'll be interesting to see if this line of resistance holds just like that Russell chart I just provided you. It'll be up in the level of around 59.31 this next week, 59.30. Now, if the price action does move into that direction, of course, this gap would fill. If not, you're going to notice that below there are a few places of support that I've clearly marked. It could be a potential head and shoulders ultimately if you saw lower price action in the Nasdaq, maybe down around the 5,600 range, maybe it potentially touches and then bounces back up, and then only goes up to the 5822 range where you might see a potential head and shoulders. Moving on to the SPY chart, which actually let's move on to the S&P specifically here. And you're going to notice again the same pattern, except next week I would submit that we will see some resistance around the 2455 level. If we look at the one-day chart, you can see there is the possibility of rolling over. Of course, there really ultimately has been no better game for gains than equities. So, but we will be watching this very carefully. It may, in fact, action may, in fact, coincide with moving up into the 20-day, and it'll be interesting if it can move above. You'll notice 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12 days in a row closing below the 20-day moving average. That typically is bearish. The Dow Jones Industrial Average is again showing somewhat the same trend, just below its 20-day moving average, but yet above its 50-day moving average. Moving on to the dollar. Unless you've been hiding under a rock, you know that the dollar closed at a 2017 low on Friday. You will notice that it will be challenging, could potentially be challenging support at the 1 year, year-over-year low. Also, you'll notice another low back in this area right here. You could be potentially this next week, the dollar could challenge a 2.5-year low. So be watching, of course, the dollar. Moving on to the gold chart. Ladies and gentlemen, you can of course tell that you can see this clear as day that gold still has a ways to go to ultimately move beyond its 2011 downtrend resistance. However, gold of the metals, at least of the two, silver and gold, has been showing a good amount of buoyancy. However, you're going to see ultimately it's going to have to pass through this 1300 level. It has to. And then, of course, test it and move above it. The good news, however, is there was a downtrend since the beginning of July, and that was resistance. It is now holding a support along with the 50-day moving average. You'll also notice that gold on Friday did touch the 20-day moving average, actually slightly pierced it, but then bounced right back off it. So a lot of technical traders would say this is not a good sign. Right here, this is not a good sign. It looks fairly indecisive. So again, I think this next week is going to be very interesting, not only for equities, but also for the dollar and for gold. Moving on to silver. Silver has obviously been creating lower highs. However, since this, whatever you want to call this event, on the 6th, we are seeing higher highs. And silver looks somewhat similar to the gold chart in that it's literally been sitting on 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12 days in a row on the 200-day moving average. However, the 20-day moving average is moving north very quickly, and there is the potential, if we scroll in here, the 50-day moving average may in fact finally be turning north. So we will of course need to watch the silver chart as well. Ladies and gentlemen, if you're interested in my approach to charting, which is unique, this is a hobby for me. I'm a musician and conductor by training and educator. If you're interested, please go to my Steemit page, which happens to be steemit.com/@the-maestro. And you're going to notice here on my Steemit page, I post just several different ideas as they come across my mind or my desk or an email. And here's, for instance, an idea for you to consider for those of you who are in 401ks. This is USERX. It's a global gold fund. You're going to notice that it is finally above its 200-day moving average, and it sure looks like it's forming a bull flag. So if you're interested in small examples also like this, where I examine government and I examine, for instance, the next couple of elections and the ages of our representatives, there's another example of some of the things I'd like to look at. Next, if you're interested, my website is themaestroway.com. And here, of course, is my latest roundtable with Lior Gantz and Lynette Zhang. And below, it's a free subscription. Admittedly, I'm looking for 1,000 subscriptions by the end of September. If I can achieve that level, all of my charts, all of my videos will first be posted through that service. Also, you can find me on Facebook, and my address on Facebook is tmaestroway. It'll be, of course, facebook.com/tmaestroway. Ladies and gentlemen, again, thank you for joining me today, and I thank Greg for allowing me to do this. while he has decided to move on from YouTube, I have not. My footprint must not clearly be nearly as large as Gregory Mannarino's to be censored. However, it is a concern. Already, I've gone of my 150 videos within just a short period of 4 months. I've had 2 videos also censored. So it is a concern, ladies and gentlemen, and of course you can find Greg on Daily Motion, and you can find him on his Steemit page as well. So again, I'd like to thank Greg for allowing me to do this. I'd like to thank you for watching, and I'd encourage you to find me on YouTube, my YouTube channel. Just simply look up under the search, The Maestro Way. Have a fantastic day, have a great weekend, and do what I always do. Hug your children.